One economy that we simply can't afford to overlook is the luxury goods sector, because right now it is experiencing a significant downward trend. Luxury goods are exhibiting clear symptoms of a fever, so to speak, because their stocks have dropped quite significantly. I have to bring this up because it means that the current widespread economic challenges aren't just affecting the lower or middle segments, but it's now reaching the upper middle class customers of luxury goods, and even the wealthier starting to feel the impact. Thank you so much to everyone who has followed the Sai Money Monster channel and supported me from the very beginning up until now. Honestly, it really hasn't been easy to get to this point. And having everyone's support and encouragement really means so much to me. For this video, if anyone would like to support me, you can do so via this QR code. But if it's not convenient for you to support, that's totally fine too. I truly want to thank everyone so much for liking, sharing, and commenting to cheer me on, or even just chatting in the comments. And if there's ever any information I get wrong and someone kindly helps correct me, thank you so much for that as well. So that's it. Don't forget to hit subscribe too. Thank you. Let's start updating this news with the recent market performance and growth of personal luxury goods stocks, or luxury items for personal use. Right now, if any brand claims to be a luxury brand, but their customer ranking isn't truly wealthy, like exceptionally wealthy and high net worth individuals, then they're all facing some pretty significant challenges at the moment. Let's start with Hermes, because whether it's the iconic Birkin or Kelly bags, or the simple fact the sight of people waiting just to get these bags has helped Hermes maintain its throne as the ultimate top-ranking luxury brand for a very long time. Right now, Hermes stock is growing at exactly 0%. If you think 0 is bad, let me tell you, in this specific case, 0 is actually the best possible outcome. Because even global giants like LVMH, which owns Louis Vuitton, right now their stock is currently down, dropping by 17%, losing its position as the company with the largest market cap in Europe. Next is Kering, the owner of Gucci, which is down 41%. Kering used to be in the top 10 companies in France, but now it has dropped to 23rd place. Just in the first half of 2024, Gucci's operating income fell by 45%. The owner of Gucci gave an interview to Bloomberg, saying that this happened. This is because the demand for luxury goods in China has dropped quite significantly. As for the specific brand that I see has fallen the most, it is Burberry, the original owner of the iconic trench coat design. Their stock is currently down 57%, causing the total market value of luxury goods stocks to lose as much as $240 billion. If you have ever wondered exactly how elite luxury goods have been performing in the market, then let's take a close look at this detailed chart together. This is a chart showing the consistent growth of luxury goods over the past 25 years. You can see that the growth has been incredibly strong and resilient throughout various economic cycles. Honestly, nothing has been able to shake it. In fact, luxury goods have been reaching impressive new record highs, even better than the S&P 500. And in 2023, personal luxury goods generated as much as $362 billion in revenue. If you convert that to Thai baht, it's roughly 12.6 trillion baht. Do you know how much money that is? It's so much that if you compare it to GDP, it's almost equal to the GDP of Thailand, about 25 times over. So what are they selling? These products include things like clothing, bags, jewelry, accessories, wine, all kinds of supercars. Or for example, do you know how expensive some of these things are? Like, this Dior scented candle cost $1,150. If you convert that to Thai baht, it's about 40,000 baht. You'll light it so it evaporates and helps you relax. Each stick costs 40,000 baht. Let's take a little deeper into the pricing, specifically for luxury goods. How much do they actually sell for? Let me take you back about 4 years. This is price data from 4 years ago. For women's clothing in the luxury market, the average price per piece was $3,395. If you convert that to Thai baht, that's about 118,000 baht per item. As for men's clothing in the luxury market, the average price was about $3,305 per item. If you convert that to Thai baht, it's a bit cheaper, about 115,000 baht. These are prices from 2019, which was kind of a transitional period, right before COVID hit. During COVID, everyone struggled, and after COVID, some people bounced back while others didn't. But there was an interesting phenomenon that happened in the luxury goods market, and that is, after COVID ended, the prices of goods in the luxury market experienced a significant surge. They jumped by 25% from 2019 to 2023. We can see clear evidence of this phenomenon from the extensive queues of people waiting outside luxury stores. According to comprehensive data from the edited retail intelligence platform, the price increases for luxury goods, no matter how high the prices go, it doesn't make the customers disappear. Honestly, the more expensive it gets, the more people are willing to fight for it. And looking at the history of luxury goods price hikes, I can tell you that the owners of these empires really enjoy having the power to raise prices. Judging by how they increase prices, let me just say, if I may speak for the owners of these empires, I bet if a customer ever said, "Wow, your bags are so expensive," they'd probably reply, "It's not expensive at all." The reason you think it's expensive is simply because you're not rich enough yet to be our customer. Just kidding. In fact, the high price is actually the selling point of luxury goods. The more expensive it is, the more exclusive it becomes, meaning not everyone has the right to own luxury items. You have to be rich enough, or you have to be willing to go into credit card debt to be able to own luxury goods. And another special thing about these luxury products is that no matter if Russia goes to war, oil prices go up, or there's inflation, even if the Middle East is at war with itself, nothing seems to shake the price of luxury goods. This has even led to a trend of investing in luxury items because some types of luxury goods can actually yield better returns than certain assets. Take Chanel, for example. If you're a Chanel fan, you probably know that Chanel raises its prices regularly, every single year. If you just count from now and look back to 2016, Chanel has doubled its average product prices. And for the classic Chanel bag, which looks something like this, back in 2008, it used to sell for $1,650 per bag, or about 60,000 baht. For this year, 2024, it looks like this and sells for around $10,200 per bag. Or if you convert that to Thai baht, it's roughly 357,000 baht. If you feel like crying, I get it. But hey, if you're not buying, there's no need to cry. Louis Vuitton isn't far behind either. Overall, Louis Vuitton has raised its prices quite a bit too. But there's one bag that really stands out. It's called the Millionaire Speedy Bag. It's a speedy bag made from crocodile leather, available in 5 colors. And let me tell you, the name millionaire really means that if you're not a millionaire at the $1 million level, $1 million, you probably won't be able to afford it because this bag costs as much as $1 million. If you convert that to Thai baht, it's about 35 million baht. But then, the signs of a downturn in the luxury goods market started to appear in 2022. According to data from the Soudier Watch Index, as reported by Bloomberg, the prices of secondhand luxury watches like Rolex and Patek dropped from their peak, which was around 2022, and then fell significantly, as you can see from this graph, reaching their lowest point in the past 2 years. In addition, websites that sell luxury goods at retail, so-called retail luxury, have been going out of business. For example, Matches Fashion, a website that sells designer products and all kinds of designer brands, luxury goods like Balenciaga and Prada and so on, were also sold on Matches Fashion, which has now gone out of business. Matches Fashion was owned by Mike Ashley, part of the Frasers Group, and sold to 176 countries worldwide, so it was huge. But since it went under, it has now been rebranded as Flannels, with a new concept called New Luxury. Before Match's fashion shut down, there were even rumors reported in the New York Times. A designer named Rosh Matani, who owns a jewelry brand called Alieri, which makes those beautiful gold coin pieces. She shared in the New York Times that Match's fashion owed her brand Alieri as much as $88,000. They selected stock from Alieri during Fashion Week and sold it, but when it came time to pay, $88,000 was missing, and she still doesn't know if she'll ever get it back. After Match's fashion went under, there was another major player, Farfetch. I've actually used their service before. It's a website that sells designer brands in the UK, and it's really huge. Farfetch is also facing similar problems. They almost filed for bankruptcy once, but managed to survive. Still, their finances aren't looking great, so we'll have to keep an eye on what happens next. Because if big luxury brands can't make it and have to put a lot of stuff on sale, these retail websites probably won't survive either. And the next question I wanted to know, so I did some research. Why is the luxury empire collapsing right now? A significant portion of the collapse of the luxury empire can really be attributed to the fact that its rise and fall is extraordinarily dependent on demand from China. Luxury goods saw a massive and truly unprecedented surge around the same time that China's GDP was growing at double digits. But now, China's economy is currently facing some very significant economic struggles, with deflation in many sectors, or even in major sectors across mainland China. So as a result, China's GDP has been steadily declining, dropping to around 5.4%. And now, even though the target is to achieve 5% GDP growth, it's not reaching that. This has led to a decrease in demand for luxury goods in China. Plus, China has also been actively promoting a shift in trends, encouraging people not to buy luxury items anymore. Susanna Push, an analyst from UBS, said that right now, the luxury goods market is experiencing a slower for longer trend, meaning it's going to stay sluggish for quite a while. After prices had previously skyrocketed, combined with China's sluggish economy, things have really slowed down. And it's not just China's economy either. The global economy as a whole isn't doing well right now. The final question for this episode is, what does the decline of the luxury empire tell us? Let's look at the bigger picture. Think of the economy like water, floodwater to be exact. People are like they're arranged in a pyramid. At the very bottom are the poorest, and at the very top are the richest. Normally, when a crisis hits, if the flood isn't too severe, it only affects the lower levels and gradually rises. The people in the middle or upper levels usually aren't impacted much. So when there's a global economic crisis, unless it's really intense, those in the upper middle and upper classes don't really feel it. The rich aren't affected at all, and that includes the customer base for luxury goods. They're not impacted either. But now it's clear that luxury brands are seeing their sales and stock prices drop. This decline is happening both among their core customer base, the truly wealthy, who make up 40% of luxury goods customers, and among the middle class buyers, who might save up for a long time to make a purchase or buy on installment, making up the other 60%. So when it comes to luxury goods, it's easy to interpret this as a sign that everyone should get ready to tighten their belts. Because in today's global economy, it's not just the poor or the middle class, even the rich are feeling the impact.